This daily dose is brought to you by Pirate.Black. ARRR!
The Bank for International Settlements, or BIS, is the self-described bank for central banks. The BIS is owned by the 63 central banks that make up its membership, and it is based in Basel, Switzerland. The BIS's job is basically to help central banks coordinate their monetary policies, and an informational video by the BIS from February this year revealed that all 63 central bankers recently met in Basel to discuss monetary policy, a very rare occurrence that only happens during times of crisis. What's crazy is that the informational video even shows all 63 central bankers taking their seats for the BIS's secretive meeting shortly before it began, at which point the video crew was quickly shuffled out because obviously these meetings take place behind firmly closed doors. Now, if you've watched any of our previous videos about the BIS, you'll know that it's been working closely with central banks to develop their CBDCs, and that CBDCs will make it possible for them to have total control over the economies of their respective countries by determining how and when money can be spent.
How and when money can be spent.
If you watched our video about CBDCs versus cryptocurrencies, you'll know that most CBDCs are being built from the ground up to maximize financial control, whereas most cryptocurrencies were built from the ground up to maximize financial freedom and, in some cases, financial privacy. One reporter asked why CBDCs are necessary when we have alternatives, and a second asked about the privacy concerns people have about CBDCs, given that the BIS had specified that privacy will not be possible with CBDCs and that all user data will be kept at the central bank. A third reporter asked about whether CBDCs would actually see any adoption given their concerning characteristics. A fourth reporter asked about these characteristics, namely whether someone would be blocked from buying, say, alcohol and tobacco, or blocked entirely if they speak out against their government. What's concerning is that Hyun didn't really have a clear answer to any of these questions, and even applauded CBDCs for their problematic programmability. He also said that this programmability could theoretically be applied to any payment system, so long as a government manages to successfully roll out a digital ID. Let's not forget that last point, shall we? In the BIS's eyes, the future of finance takes the four roles of the central bank to the next level with the help of both wholesale and retail CBDCs. For context, wholesale CBDCs will be used by select individuals and institutions, whereas retail CBDCs will be used by the average person. That's right, two systems. Regarding wholesale CBDCs, the authors note that they can be used to govern the inner workings of the financial system, and they promise their audience, which is again mostly powerful individuals and institutions, that their privacy will be protected thanks to zero-knowledge proofs, also used in crypto. The next subsection of the BIS report talks about the real terror, and that's those retail CBDCs. Regarding retail CBDCs, the authors point to the mass adoption of Brazil's fast payment system as proof that the average person will voluntarily adopt a retail CBDC, even though the BIS's own research shows that only 4 to 12% of adults in developed countries would voluntarily adopt a retail CBDC. I wonder why. So, if you're wondering how the hell the central banks will convince anyone to adopt this, the authors clearly state that, quote, by allowing non-bank entities to offer CBDC wallets, they can also overcome the lack of trust in financial institutions that holds back many individuals in today's system. In other words, central banks will use private companies that people trust to roll out their retail CBDCs, which is funny considering the authors spent the earlier part of the report trying to convince the reader that the central banks and their financial systems are the pinnacle of trust. What's even funnier is that the BIS actually did a report about how much people trust the financial system, and the figure is only around 60% in developed countries. I repeat, in developed countries. And I bet it's even lower now. Anywho, the authors then reiterate what's been said in other BIS reports about the privacy of retail CBDCs, stating that, quote, central banks have no commercial interest in personal data and can thus credibly design systems in the public interest. Put simply, privacy for me, but not for thee. Hypocrites. And did I mention that, quote, transactions would not be recorded on a public blockchain visible to all? Now, if all of this wasn't bad enough, in the next subsection, the authors discuss a global, quote, multi-CBDC platform that will be governed by the world's central banks. And the cherry on top is that the privacy of these entities will be ensured, so the public will have no idea who's in control of this powerful system. Even though these comments are made in the context of a wholesale CBDC, the authors make sure that the reader knows that the same global platform could be put in place for retail CBDCs and similar types of digital currencies. 90% of central banks are exploring CBDCs. There are 3 retail CBDCs currently live, with 28 in development, and 60 countries are working on fast retail payments. This list includes the United States, whose Federal Reserve is planning on rolling out the FedNow fast payment system in 2023, which we now know will be capable of having many of the same qualities as a retail CBDC, especially if the US government manages to roll out a digital ID system, as per Hyun's remarks. Meanwhile, France and Switzerland are working on a multi-CBDC platform, as are Singapore, Malaysia, Australia, South Africa, and Hong Kong, Thailand, China, and the United Arab Emirates. Quote, in sum, central banks are working together to advance domestic policy goals and to support a seamlessly integrated global monetary system with concrete benefits for their economies and end users. And because the authors still need to bash crypto to get the conclusion in, quote, instead of serving society, crypto and DeFi are plagued by congestion, fragmentation, and high rents, in addition to the immediate concerns about the risks of losses and financial instability. This statement might be the most hypocritical of the entire report, because many central banks are actually testing their CBDCs using cryptocurrency blockchains. This brings me to the big question, and that's what all this means for the crypto market. Well, if you ask me, all of this is insanely bullish for crypto because nobody is buying the BIS's BS except the central bankers. Now, this obviously doesn't mean that fiat currencies will be defeated in 4 years' time, but it could mark the tipping point where crypto adoption becomes so widespread that it truly can't be stopped. I wonder what the BIS will say then.
Follow the treasure to pirate.black, because financial privacy today is freedom tomorrow. Ah!